So guys, today I have a very interesting video for you. It's a stock we haven't discussed on the channel in a very long time, and I think the potential for this to 2x pretty easily is ripe for the picking. So in this video, guys, I'm going to discuss all the details with you, so stick around with me. It's going to be a fun one. I think there's a very realistic possibility that this stock is very undervalued at today's prices, and you want to hear my reasoning why, especially if you watched my video last year when I talked about its big brother, and that stock has almost tripled since then. Okay, so let's break the video down, guys. Today what we're first going to discuss is, I'm going to reveal the stock. What stock am I talking about? And I'm also going to talk about some valuation metrics around this stock. Secondly, I'm going to compare it to the number one player in this space. And then finally, I'm going to share with you my price prediction for 2021 onwards. So smash the like button, guys, for the YouTube algorithm. And if you do enjoy this video and you want more insights like this on other stocks that I may be researching, looking into, consider joining our VIP group, because we do have a Discord in there where I am constantly looking up stocks, discussing it with my members, and sharing what my thought process is, if I plan to buy, when I plan to buy, and all these other details. Guys, I think you'll enjoy the Discord. Check it out, link in the description down below. I'll leave it as a pinned comment as well. So like I said, this stock has a potential to 2x pretty fast here. I think it's very undervalued, so let's get into it. First point here we need to talk about, I'm going to reveal what the stock is, and I'm going to talk about today's valuation with the stock. So this company went public back in 2019. That's when it was a brand new IPO, and the stock has been performing fairly poorly since then, despite being a pretty hyped company about a year ago. Now what I like is that this company has millennial founders, and they are targeting millennials and younger generations, which means their product is relevant here today. This company is also pretty cheap. It's sitting at a $5 billion market cap, and the share price is like around $12 per share today. And all of this is while they are producing good revenues and have improving fundamentals. Fundamentals are extremely important, especially if you're investing in a business that's only around a $5 billion market cap and is trading at a $12 per share price tag. You want to have some level of confidence that the money you're putting into the stock has a good company behind it. So while 2020 was a tough year for this company, 2021 is looking like a record-setting year with over 31% growth expected, along with over $850 million in revenue expected. So guys, a 30% growth is strong. You're not going to come across that too often here in the markets, and when you find a stock that's undervalued with these strong growth metrics, yeah, it catches my attention. But here's the thing, they aren't profitable today, but guys, their free cash flows have been continuously improving, and they are expected to pull in a teeny tiny profit in 2022. Now guys, 2022 is not that far away. We're just about to enter 2021, so you could say the profitability is just around the corner. Now all of this is driven by their strong gross margins. Although it has been hurt here in the short term, they're still at a 70% gross margin, and it seems to be bouncing back to prior levels, and this is a good sign because they're improving their efficiencies with the business, and this helps profits start to roll in over time. And guess what? In their most recent earnings, they did give us a hint here that their long-term goal for these gross margins is to hit 85%. So if they can achieve this, it will be a very profitable business. Okay, so I think I've kept you guys in suspense for long enough. Let me know if you're still around, and let me know if you actually were able to guess what the stock is. But without further ado, let's reveal it. Smile Direct Club, ticker symbol SDC, is the stock we're talking about today, and I think this has a good opportunity here ahead of it, especially going into 2021. So I honestly think that the market is severely overlooking Smile Direct Club because everyone is focused on the leader in this space, the number one player, Align Technologies. Now guys, I own Align Technology stock. It's one of my most successful investments. You can see I made videos on this about a year ago, and I made videos, throughout that time period explaining why I'm so bullish on this stock, and that hasn't changed. I'm still bullish on this company, and it's panned out really well for me. I know that my VIP members that joined the group last year have more than made up for their membership fees. So guys, trust me, this is a group you want to be part of. But now here's the interesting thing, and this is what I want to really drill home today. Align has tripled in the last year, and simultaneously Smile Direct Club has, improved a little bit, but since IPO, the stock is still down. So I think going forward, this could be the next company in this sector to double, triple our money or more. So now if I'm being completely honest, I think the Smile Direct Club was really a strong buy at the $10 mark because it does line up with strong support here with the moving average on the weekly. But guys, I only started looking at the stock again recently over the last week or so, so I did miss out on that. But that's okay. I think even at today's prices, just over $12, it's still a very tempting value. Ever since the March lows, it's been on a strong uptrend, going from under $4 per share to already tripling since then. But I think the stock can go much, much higher, but I'll save that for part 3 when I talk about my price predictions for 2021. So to get a proper understanding of this company, the space, and its biggest competitor, Align, let's now talk about Smile Direct Club and compare it to Align Technologies. So over the last year, both stocks have seen good gains. Smile Direct Club with nearly 50%, but Align blows it out of the water here, guys, with over a 94% gain, which is absolutely amazing. Remember, this is just the 1-year chart. If we expand it out even further, because Align's been around for much longer, the gains for Align are just mind-blowing. Now this has driven Align's valuation to almost a $42 billion market cap, which is a monster valuation, but this is a very strong business, strong growth, strong financials, so you know what, I can't blame investors for wanting to get in on this. Not to mention, Align is also the leader and they will continue to be number 1 in my opinion, which is why I don't really plan on selling my Align position as of today. Who knows, that may change and may take some profit soon. But I think there is space for a good alternative, a good number 2 here, especially one that has a different business model when tackling this market. See, I like Align because of their partnerships with dentists. It's trusted, safe, it's something that dentists can recommend to a patient, which is credible. Smile Direct Club takes a different approach. They go direct to consumer and they essentially skip the middleman, which is the dentist, and they provide these aligners directly to the consumer. This of course would typically mean lower costs because there's less people involved to pay out, which is why it's gained a lot of popularity, especially with younger age groups like teenagers, for example. See, now while I personally would prefer the dentist route, and that's pretty much why I bet big on Align Technologies instead of Smile Direct Club about a year ago, I still think there's space for Smile Direct Club to kind of prove that consumers want choice. Some consumers don't want to go to the dentist. Some consumers can't afford the dentist. And that's where they provide value. Now, I'm based in Canada, but here you can see some Smile Direct Club centers roughly around me. And well, all 3 of these locations have excellent 4.7 out of 5-star reviews with hundreds of reviews at each location. So this tells me, for the most part, consumers like their service and product that they offer. So now, this is how I see it. Align today has a 2021 price to sales of 12.2x, and this is respectable considering their track record and the growth expected next year of 34.4%. Smile Direct Club, however, is sitting at a 2021 price to sales of 5.4x, less than half of where Align is at today, yet they are expected to grow by 31.4% next year, pretty close to what Align's expecting. Something doesn't add up here. The market, I'm telling you, the way I see it at least, they're putting all their bets on Align. They don't care about Smile Direct Club. But Smile Direct Club is showing us that they are still a good business. They are improving their metrics. And for us that actually take the time to research these companies, this is the opportunity we're waiting for. So for a business that's expected to grow over 30% next year, a business that has their fundamentals improving, a business that is expected to be profitable in a couple of years, to have a price sales of only 5.4x, I think is very cheap, especially in today's market. And I think that it's very hard to make a case here that Smile Direct Club is, even fairly valued at these prices. I think it's pretty clear to me, at least, that the stock is undervalued. I think for a company like this, it should be commanding at least a 10x price to sales looking at next year's numbers. Still below Align because, that's more a premium player in the space. But I think a 10 it's definitely something that this company deserves. Now guys, the market for clear aligners is expected to keep growing at over 20% year over year. So guess who's gonna benefit from all of this movement? Both Align and Smile Direct Club are gonna benefit from this. But here's the thing, they're not the only players in this space. There are plenty of other companies competing for market share here. But the reason I like these two brands specifically is that they've done a very good job on their marketing and their branding to build a reputation. I think that over the long term, branding is going to be very important here because results are going to be pretty close for all of these competitors. And it's really going to come down to what names customers recognize. If they recognize something like, Align, where it's just seen as a trusted brand, they're going to go with that. If they have friends that have gone to Smile Direct Club, they've had good experiences there, and it's cheaper, guess what? They're probably going to end up going with that brand. Now, these other companies in between can probably steal some of the market share as well, and most likely they will. But I think over the next few years, you're going to see some consolidation in this segment altogether. And Smile Direct Club, I'm gonna say it right now, could be a prime candidate for a takeover from one of these other big brands. I don't think Align is gonna be interested in buying out this company. They're competing head to head. But I think one of these other players, maybe 3M, maybe some other company in this space, may consider buying Smile Direct Club, which could be another opportunity here for us as investors. I also like this product because it's a product that every human, every generation is going to want to use. I mean, who doesn't want straight teeth? It has health benefits. It helps with your self-confidence, makes you look better, makes you feel better. I think it's a great product, and I think it's just a natural evolution, a natural improvement on traditional metal braces. Now, speaking of these metal braces, you can see here that in 2019, they still held a big chunk of the US market. So as this gets phased out, this opens up the opportunity for companies like Smile Direct Club and Align to gain even more market share. Okay, so now that I've kind of given you an idea of why I feel this company is undervalued, let's discuss my price prediction for 2021 for Smile Direct Club. So as the title of this video most likely states, I believe that this stock is undervalued, and I think the stock can 2x by the end of 2021. Now, I know in this market, it seems like a 2x is a joke. There are stocks that 2x in a day. However, I think the difference here with this company is that I think it'll be a sustainable 2x. I don't think it's just gonna shoot up and then kind of die off after that. Nah, I think it's gonna be a slow and steady 2x, but once it gets there, it'll just keep improving as long as their execution remains and as long as they're able to hit those metrics that they've shown us in their presentations and investor reports and all that. If we look at insiders here, we can see that over the last 6 months, they have been buying shares consistently. And over the last month, we only had one sell order from a large shareholder in the company. But guys, the other insiders and management, they're all holding strong here, signaling to me that they believe their stock is undervalued at this moment. So here's the thing, if we give Smile Direct Club a respectable 10x price to sales multiple for 2021, that should put their market cap at around an $8.59 billion valuation. Now, yes, if you're looking at today's market cap, that's slightly less than a 2x. However, I think that Smile Direct Club can actually beat expectations next year because the economy should bounce back pretty strongly. People should start going back out and making purchases like this for themselves once again because they're not going to be cooped up in their house all day. So I think this should see some strong sales next year and beat expectations, which could very easily push this company to a $10 billion plus market cap. If that happens, their share price would sit at around $26 per share, which is more than double of where their stock is at today. Now, I just want to make this clear, as of recording this video and releasing it here, I don't hold a position in Smile Direct Club, but I am considering opening one maybe this week. We'll see. I do think that the stock has potential, but that being said, guys, I think this is a highly risky stock. I think that because they're not making money, they're losing a bunch of money. There is risk involved, so as a result, I will be putting this in my speculative bucket. It's not going to make it into my main portfolio just yet. However, that being said, over time, if things improve, hey, I may keep adding into the stock and it may become a stock that's worthy of being in my main portfolio at some point. But bottom line, as of today, this is a spec stock. So guys, I really wanted to release this video before I bought the stock because I wanted to show you the value that you'd get by joining our VIP group if you are interested. I discuss every stock that I look into, share my thoughts, have discussions with a ton of VIP members. So if you want to join that community, link description down below and the pinned comment. I hope to see you in there. Just keep in mind, prices will be going up January 1st, 2021. So if you do want to get in soon. Anyways, guys, I hope you found value in this video. And if you did, smash the like button down below. Help the channel out. But either way, thank you so much for watching, guys. Don't forget to invest positively. And I'll see you in the next one. Peace.